Apollo drops 3.7 billion on a Japanese glassmaker, and suddenly everyone thinks the mega buyout is back.
Megadeal values are actually up 300%, Nate. The data says it is back.
Sure, but wait until you hear Blackstone is circling a global cricket league. I cannot make this up.
Wait, really? Private equity in cricket?
Wickets and warrants, Maya. But before we get to the pitch, we need to look at Apollo's big play in Tokyo. The rundown. So we're officially back in Megadeal territory, up 300%. Everyone suddenly remembered how to sign a term sheet.
Or the financing markets finally stopped giving them night terrors. But yes, the money is flowing. Look at shipping. Hapag-Lloyd is taking Zim private for $4.2 billion.
Pulling it right off the New York Stock Exchange, which is a power move in this freight cycle. Zim's stock has been a roller coaster.
A roller coaster with a broken safety harness, but Hapag gets the fleet capacity they need. Speaking of buying capacity, Gilead is dropping nearly $2 billion on Ouro Medicines.
Ah yes, autoimmune T-cell therapies. Because if you can't build it in-house, you just buy the smartest guys in the room. Classic pharma playbook.
I actually hate that framing, Nate. They aren't just buying the guys in the room. They're buying the clinical trial data. Ouro has the exact pipeline Gilead desperately needs to diversify.
Okay, fair. I'm doing my banker shorthand thing again. I just look at a $2 billion price tag and see a very expensive shortcut.
It's a necessary shortcut. Meanwhile, Warren Buffett is out there doing Warren Buffett things. Berkshire is deploying $1.8 billion for a strategic stake in Tokio Marine.
2.49%. Barely a rounding error for him. But it's so on brand, just quietly scooping up cash-flowing Japanese insurers while everyone else throws money at software.
Speaking of throwing money, did you see the gossip on Estee Lauder?
The Pug Brands rumor? A $20 billion beauty behemoth. I'll believe that when I see the filings. Antitrust lawyers would have a field day.
You think? Beauty is incredibly fragmented. But fine, what about Blackstone kicking the tires on the Global Cricket League?
Wait, really? Now that's the alternative asset class I live for. Private equity buying into cricket. I'd pay real money to read that pitch deck.
I'd rather read the Desjardins footnotes. They just closed on Guardian Capital for 1.67 billion Canadian. They're sitting on 280 billion in assets under management now.
See, you get excited about Canadian wealth management, and I'm over here waiting to talk about Apollo. Because their new buyout in Japan is exactly why we're seeing this mega deal surge.
$3.7 billion for Nippon Sheet Glass. It's their biggest private equity push into Japan ever.
And the way they're structuring the buyout is fascinating. The big one, 300%. That's the surge in global mega deal values right now. 300%. The big buyout shops are finally waking up from their interest rate hibernation.
I read that same analyst note, Nate. But let's be real for a second. The raw volume is flattering, but look at what they're actually buying. Apollo is dropping $3.7 billion on Nippon Sheet Glass. Glass. They're buying a window company in Japan.
Hey, don't disrespect the glass. Nippon Sheet Glass is a massive supplier, and valuing it at 590 billion yen is a classic Apollo move. They love heavy industry, they love cash flow, and frankly, the financing conditions are finally cooperating. This is proof the buyout giants are back at the table.
Are they though? Or is this just a very specific Japan play? You have the yen where it is, you have Japanese corporate governance finally opening up to private equity. I don't see this as proof of a global financing rebound. I see this as Apollo finding the one market where leverage is actually still cheap enough to make their IRR models work.
I completely disagree. You can't call it an isolated Japan play when we're seeing massive cash deployments everywhere. Look at the shipping sector. Hapag-Lloyd is paying $4.2 billion to take Zim private. They're ripping an Israeli shipping giant right off the New York Stock Exchange. That takes serious conviction and serious financing.
Shipping is its own weird little universe right now. You know that. The supply chain chaos gave them war chests full of cash. Hapag-Lloyd is just spending pandemic money. That's not a private equity renaissance.
Spoken like someone who actively hates my macro narratives? But come on, you can't deny the Japan momentum. Even Buffett is getting in on it again. Berkshire Hathaway just dropped $1.8 billion for a 2.49% strategic stake in Tokio Marine Holdings.
Wait, really? Tokio Marine? I missed that filing.
Right? Warren is out here buying insurance companies in Tokyo. He's basically copying Apollo's homework.
Don't ever say Warren Buffett copies a private equity firm. The man would have a heart attack. He's been buying Japanese trading houses for years. If anything, Apollo is finally reading Warren's old letters to shareholders.
Fair enough. My old managing voices, 300%. I read that analyst note this morning and actually spilled my coffee. They're calling it a massive mega deal rebound.
I saw that. And look, I love a big number, but a 300% surge on a dead quarter is just math playing tricks on us.
Oh, come on, Maya. It's not just math. The financing conditions are actually thawing. You have buyout giants stepping back up to the plate. Look at Apollo dropping $3.7 billion on Nippon Sheet Glass in Japan. That's a massive private equity push. That is real money.
Sure, the Apollo deal is a real traditional buyout, but the analysts are blending that with this AI frenzy. They pointed out software did over $170 billion across 160 deals last month alone. I guarantee you most of that volume is just big tech panic buying AI startups to avoid falling behind.
Panic buying or not, it prints fees, and the scale is bleeding into everything else. We're hearing whispers that Estee Lauder is in deep talks to buy Pug brands. That would create a $20 billion behemoth.
I'll believe the Puig deal when the ink is dry, valuing a Spanish beauty giant right now with consumer spending this weird. Absolute nightmare. I need to see the data.
Fine, be a skeptic on lipstick, but what about Blackstone?
What did Blackstone do?
Word on the street is they're evaluating a lucrative stake in the Global Cricket League.
Wait, really? Cricket?
Yes, the bankers are officially priced out of software and are buying sports leagues instead. It's a beautiful thing.
That's actually hilarious. I guess when AI multiples hit 50 times revenue, you start looking for value in wickets.
Exactly. The narrative is definitely shifting across the board.
Maybe in sports, but if we want to talk about narratives shifting in tech, we need to look at what regulators in Southeast Asia are doing tomorrow. Spill the tea.
So the Estee Lauder Whisper network is absolutely out of control this week.
You mean the Puig brands rumor? I was literally just reading the analyst notes on this.
A $20 billion beauty behemoth. I love it. It is classic legacy brand panic buying the cool European kid.
Panic buying? Estee Lauder needs a win, sure, but Puig is a massive complex integration. I refuse to believe Estee can easily swallow a $20 billion target right now with their current balance sheet. Have you looked at their recent margins?
They can if the financing markets stay this hot. Mega deal values are up over 300% right now. The debt is there. The bankers are practically begging them to do it.
Just because the debt is there does not mean the strategy works. They need operational fixes, not a $20 billion distraction.
I am telling you, vanity deals are back. And speaking of vanity deals, please tell me you saw the Blackstone leak.
The Global Cricket League stake, yes. Private equity finally realized there is life outside of European soccer.
It is absurd. Blackstone buying into cricket? What is next? KKR taking over competitive cornhole. The sports private equity thesis is totally exhausted. It is a massive bubble.
Oh, come on. Cricket has over 1 billion fans globally. It is a massively untapped media rights play. You are just mad because you do not understand the rules of the game.
I understand the rules of cash flow, Maya. And valuations in sports deals right now are completely divorced from reality.
Well, if you want rational cash flows, we should probably pivot to software. Industry watchers just clocked over 170 billion across more than 160 software deals last month alone.
The undisputed king of M&A right now. Though I suspect a lot of that is just artificial intelligence FOMO.
We will see if the data backs that up. Those AI targets are exactly what we need to watch tomorrow, along with some really interesting regulatory ripples out of the Philippines raising their transaction thresholds to account for inflation. Dog shucks, the Gilead. Tomorrow's radar.
$170 billion across software deals last month. That is not a rebound. That is a stampede.
It is just AI panic buying. They are throwing billion-dollar term sheets at anything with a .ai domain.
Come on, I disagree. The financing conditions actually make sense now. You do not deploy Megadeal capital just for a press release. Speaking of weird capital, though, did you see the Blackstone whisper?
A stake in the Global Cricket League, which is hilarious. I guarantee nobody on their investment committee actually understands the rules of cricket.
They absolutely had to hire a consultant to explain what a wicket is.
The real monster to watch tomorrow is Estee Lauder. We are hearing deep talks to buy Puig brands.
A $20 billion beauty behemoth.
If regulators allow it, keep an eye on the Philippines tomorrow too. They are officially raising their M&A transaction thresholds to account for inflation.
Even antitrust watchdogs have to adjust for CPI. We will be tracking those Estee Lauder leaks all night, so check your feeds tomorrow morning.